the concern is right now that this will be a broader effort on cracking down on these tech giants, right? What are the best and worst case scenarios here?
Well, the best case scenario is that regulation is tightened, regulators work out with Alibaba and with Ant what changes they need to make, and the businesses are largely left intact. The nightmare scenario is one where regulators come in and say, you guys are a monopoly, you can't be in all of these businesses, and you have to exit some. And then there is some sort of great restructuring of Alibaba and Ant, and what comes out is something very, very different and much smaller.
And John, what does this mean for investors? Is it just time to wait this out and see what happens?
Well, there's a lot of uncertainty. A lot of the anti-monopoly rules as they apply to the internet have yet to be finally confirmed. And so we're waiting for those. I think right now investors are worried that what has started with Ant and with Alibaba is going to spread. Could it be Tencent? Could it be JD? Could it be Meituan? I think you're seeing that reaction in the stock market right now.
Yeah, so we are seeing now the stock really more than $100 below the analyst target price, as this GTV chart on the Bloomberg will show. But where do we go from here, John, given that these are national champions, right? And at a time when we have these trade tensions, not to mention geopolitical tech rivalry with the US?
Well, it's really interesting to note that right before the Ant IPO was shelved in the 11th hour, that came right after this very big Communist Party plenum, where the 200 most senior people in the party got together and they laid out the plans for the next 5 years, and then also into 2035, what China's economy would look like over those years. And a big emphasis was on innovation. And so the argument I think the regulators are making now is we are going to be scrutinizing businesses. We are going to be taking down monopolies because that is what's good for innovation.